Okay. I mean, technical. Okay. All right. Alrighty then. Okay. Alrighty then. Let's get started. Let's get started. Okay. All right. So let's get started. All right. So tomorrow we definitely don't have anything tomorrow. Tomorrow is Juneteenth. It is a observed holiday. That means the banks will be closed, and this will be all day. Now, the stock market will be closed tomorrow. However, the futures market will trade, but it will be trading holiday hours. So just be mindful of that. We do have the mortgage application and the housing market index for the month of June at 6 o'clock and 9 o'clock a.m. Central Time. But again, I don't expect the market to really do anything. I expect the market to range. However, I wouldn't be surprised if the market does grind up higher, trend higher. We have seen this before. We have seen this on low liquidity holidays where the market does grind higher. As the bears try to short the market just grinds higher, uses their stops, and we continue to go higher. And once everybody comes back from vacation, they see that the market is at a new high. They short the market rebalances, and then the price action begins renewed from there. We've seen this game played out so many times. So we're going to be prepared for both situations. We're going to be prepared for a breakout to the up and the downside. So with that said, let's jump into the charts. Let's jump into the charts. Now, I have been reading a lot of comments online. It does appear that a lot of people had trouble with today's price action. They had trouble um, deciphering what direction the market was actually trading in. In my opinion, on the Nasdaq, I felt it was pretty obvious that the market was going to be trading to the short side today. However, I will say that I was not expecting. Hold on, so I guess I must have removed one of my things on here. I will say that I was not expecting the market to actually short. The price action, everything about this fix this real quick. Yeah, everything about today's price action was pretty straightforward. Honestly, the only thing that did catch me off guard was this break below this range. Now, you can see right here, if you look closely, let me see if I can expand this out. If you look closely, you can see the stop run that happened underneath this range. That was a stop run. You can see that the bulls tried one. The bulls tried once, twice, three, four, five, six, 7 times. The bulls have tried using this range as support to push this market higher. But before this drop, you can see that the market used this supply zone about 4 times before the bears were able 4, 5, 6, 7 times in the same area before the bears were able to break this structure, get a stop run. It did appear that the market was going to begin to trade into this range, where if the price did trade into this range, I was prepared to buy at 117, 120 for that move back into this range and possibly a move back into this range. However, the bears failed to rotate price lower, and that's what made this long very what's the word I want to look for? A second. This long opportunity, that this failure right here solidified that we was going to come back and retest this range right here. It solidified it because this failed rotation down lower. It took the stops, and after it stopped out all the people that was long, it used everybody that was short. The market used their stops to push right back in to this range, and we touched this range to the T, where we got a move straight back down into this range right here. And if I'm not mistaken, I think this was like a 60 point move down because this was 230 and it moved right back to 160. So I think that was a 70 point move actually. Yep, a 70 point move down. And I think that was the cleanest move that the Bears will get because you can see that this big massive move down from the top from the highs, the Bears struggled to get this. They struggled to get this move. However, it took like literally 10 o'clock to 12. It took 2 hours for the Bulls to come back in and literally take away half of the work that the Bears literally tried 6 hours before this move happened to short. And let's actually look at that on the hourly chart. We have 1, 2, 3, 4, 5. This was a red candle, but you can see it closed green. So the bears literally tried to the bears literally shorted this market for 5 to 6 hours straight, and the bulls came back in and took out all that work. I caught that move, but I got chopped up in the region. Yo, congratulations on catching that move. But yeah, trading in the middle is asking to become a liquidity donation to the market, and you will experience chop, especially in this middle, especially. But I'm glad you was able to get that move up, because yeah, during the beginning of the stream, I did consider actually taking this move down short. I did consider it. However, because of yesterday, I passed on this trade, and I was like, you know what? I'll just look for the long opportunity versus trying to short this thing, because, I mean, even though this is obviously an A plus setup, it's just hard to trust it in today's market, especially with that move up that we got from yesterday. Because how do we know when we get low volume days like this? So give me a second. I'll show you how I know. Well, actually, the charts will tell you. If you trade on tick charts, you know it's low volume when you got these small candles. But NinjaTrader does have a tool called the Market Analyzer that for some reason I don't have up. Let me see if I can find it real quick. Okay. So the Market Analyzer tells you how much daily volume is being traded. If we're going to start a session under that 200K in daily volume, then that would be considered low volume. If we start the session higher than that, then that would be considered relatively normal to high volume. Right now, obviously, since we're in the Globex session, obviously we're going to be trading with low volume. But if we go into tomorrow with these numbers, then yes, it's going to be safe to assume that the market is going to be trading with low volume. However, I will say this though. I know a lot of people are going to probably disagree with this, but from my observation, even if we have low volume days, that does not mean we don't get big moves. I'm pretty sure if you look back on your charts, on low volume days, you just see a lot of stop runs. You see a lot of choppiness. You see a lot of sweep of highs, sweep of lows. It goes up, it comes back and sweep lows. It goes up, it sweep highs, and then it goes lows. And then once it's done, stop hunting, then you'll see a grind, grind, grind. So because I've seen that plenty of times, I don't necessarily take in if we have a low to high volume day. To me, if it's a lot of volume, then price is going to get to where it needs to get to without the need for stop runs. If we're trading low volume and the market is trying to get to these highs, then we're going to see a lot of fake outs to the up and downside. And then we're going to see that grind higher until we reach that area where the market is trying to trade into. But that's from my experience, and that's how I interpret low and high volume days. Yeah. But like I said, man, you can just really look at the charts and look at the candles and see. I mean, even if you look at a time chart, you can see that if an hour chart is a small candle, then you know that we're low volume. You see these big green candles in the hour, that's how you know that we're trading with high volume. So, I mean, the candles will literally tell you if we're trading with high and low volume. So that's just a trick of the trade. But the one thing I do find interesting is that The Nasdaq, even though it did trade higher, we did get a pullback back into this range. Price closed, and we got this gap up going into this new session. Now, if the market is going to range and to chop tomorrow, I don't expect for the market to get above the top of this range at 245. I don't expect it to. But if we get a breakout, then I expect for the market to take these highs out, and we can possibly see that 300 to 320 level tomorrow. Now, like I said before, I mean, tomorrow's a half day and it's a holiday. The banks are closed. It's highly unlikely to see this. However, there has been some holidays where the market did exactly that. Nobody was expecting that move higher, and the market traded higher. And everybody tried shorting it, and the market used the liquidity from the stops to push higher and reach its objective. So, like I said, I'm not going to put it past the market tomorrow that it won't break out higher and trade higher. I wouldn't put it past the market. But I do expect for the market to trade possibly between these two ranges tomorrow. But we will see. We will definitely see. But since tomorrow's a half day, it's really not too much to really prepare for. You really have to, not necessarily entries and exits, but if we get a move to the downside, let's talk about these different scenarios real quick before I move off this chart. So obviously this area right here has been support for the bulls. And I think they're going to protect this low, especially tomorrow. Now, if the bears reject price at the top of this range and they're able to break this low, I'm going to be looking for price to come back into that 2060 to about just probably give it a 30-point range right here. Right here at the top, close to the top of where this breakout is. Probably right there. Right at the bottom of that little, actually, let me see if I can see it better on the higher time frame. $250. This little price action gap between these candles right here. 260. Got a breakout right there. Like 260. Yeah, 260. The 230-ish. Somewhere at this breakout. That's what I'm going to be looking for going into tomorrow. I mean, like I said, I doubt that we get this. I really do. But we had a breakout at this level, and I expect for the bulls to come back in at this level if price does manages to trade into this level. Yeah, that's what I'm going to be looking for going into tomorrow. But I honestly believe they're going to protect this low So I think an entry around like 140 to 150, somewhere in this area where the bulls have already came back in. I think that'll actually be the trade going into tomorrow. But that's if we go down lower. Like I said, I really, it's highly likely for price to ping pong between these ranges right here. But if we go down lower, yeah, probably somewhere around 140, 150, 140 to 150. No. Huh. So yesterday the price bounced around 158, and then it came back up and bounced around 160. And so technically this head and shoulders pattern, yeah, honestly, I don't even think that we actually go down tomorrow. I don't think we even go down. Now that I'm really looking at this, because we got our left shoulder, our right shoulder, our head. So I'm assuming that the market is going to want to do this. We're going to probably touch the top of this little range right here and then make a move like that. That seems more likely to happen with the Nasdaq. But if we get a break at this low, then I'm going to be looking in this area, that breakout area, for a long. Yeah. Yeah, the Nasdaq. We're gonna have to see the price action overnight with this one. We're gonna have to see the price action overnight. Like I said, it's highly likely for the market to continue to go up higher. We're gonna probably take out these highs. If we can get a breakout from this range, we'll probably see these highs, and we can probably trade up higher than that. Because let's go over to the ES chart. The ES already broke out of its range, which for some reason the ES has been moving more than the Nasdaq has. The ES has already had a range breakout to the upside. So now the trade is, and we can already see that there's price acceptance above these highs already because price has not crashed down. We got one, two, about three green candles to the upside. So the trade to look for is to not actually chase this move going higher because obviously we know that chasing the ES is kind of foolish. Why would you do that? The risk reward is not in your favor if you chase the ES. The Nasdaq, you can get away with chasing her. The ES, not so much. Because even though we've had a range breakout from these highs, price has only moved up about 3 points. And that shouldn't be a trade that nobody takes. The better trade is to wait for price to come back into this range. Because we got the range breakout, we got price acceptance above it. Coming back into this range will be the best risk reward setup. We have the 50 EMA, we got the 200 sloping up, we got the 21. So everything is lining up for this to be support. And we can definitely see this move higher. Now, I do have my limits on this already. If this gets hit overnight, I will take a stab at a short. I will take a stab at a short. I got it at the 80 level and the 83. I mean, honestly, if we get a 20-point move on the ES, I think that this 80 level will definitely, it should hold. because we're definitely going to get a pop up. If I do get filled, I don't expect the market to trade in a straight line going up. I do believe that we'll at least get a pullback back into this range, but I doubt that we'll trade 20 points overnight. I just got these up here just in case we do. Because if the market does trade higher, this is where I do want to take a chance at a short. I do want to take a chance at a short here at this psychological 80 level. Because obviously I can't use price action to the left because this will be all-time highs, obviously. But that 80 level has shown to be a great level to short. So I'm going to take the chance on it. And hopefully it works out. But you can see that the price action is very similar to the Nasdaq chart in terms of once we got that two-legged pullback back into this area of resistance, we got that clean drop down. The bulls reloaded here in this area, and since then, price has started to grind up higher and grind up higher. We broke these highs. We had a stop run. We've had price acceptance above these highs. The only thing the bulls have to do at this point, like I said, is to hold this area. Hmm. But if this was a run of the highs, I mean, like I said, I think this is highly unlikely, but if this was a run of the highs for a move lower, I was actually looking at, oh, they took it off. I was actually looking to, what was it? Oh, I think it was, I believe it was 520 and 518. Yeah. 520, 518 because of this old high or this old resistance. These two areas of resistance, I was going to use this as potential support. I was prepared to take a long here at 522, I believe, and 518 as a scale into this position. I believe that if price does trade back into this area right here, there will definitely be bulls here, and we can possibly get a retest of higher structure. But that will be a long way down from where we are now. So yeah, that'll be a 40-point drop to the downside. But that would be a hard 40 points unless we get some crazy news on Thursday. We do have OPEX on Friday, so that could be a possibility for Friday. It could be a possibility for Thursday, actually. Yeah. But we'll see. We got an expansion now higher. We got to break a structure. $254. 254. Let's actually look at that real quick. Hmm. So I have point of control here at 54, right at the top of this range. Hmm. Okay. So if price does trade back into this area, that 554 area does appear to be a good area to come back in to go long for a potential move to the upside. The reason why I say that is because honestly, you can have your stop below this low at 50, have a 5-point stop, and get in at 555, 554 for a 5-point stop. And a test for this higher structure. Or there's no structure up there, but for a possible test of that. Because we've already taken out these highs. And I guess 54, that'll be 10 points. So this can be a 13-point trade potentially if this were to work out. So risking 5 points to make 13 points, that's a good trade on the ES. That's definitely a good trade on the ES right there. Okay. So I think that's it. You really can't really plan for tomorrow, like I said. We really have to see what happens overnight. We really have to look at the volume when the session starts. And we really have to pick our spots. If we see the structure, we're going to have to really respect the structure tomorrow. Or we can just sit on our hands because tomorrow is a half day. You don't really want to be in a position hoping that it comes back, especially when the market closed, I think the session ends around like 12 or 1 o'clock in the morning, or not in the morning, in the afternoon. So, okay. But we're just going to look at the price action overnight. We're going to talk about this in tomorrow's stream. I will be streaming for tomorrow. If the market's open, this trade room is open. So that's how we do it around here. But all right, that's all I have for right now. Appreciate you guys joining. We'll do this again tomorrow morning. Peace out.